traders and investors, welcome to Tuesday's Market Sit Rep here at Top Gun Options. Had a great two and a half hour primary live trade brief this morning, reviewing all of our existing positions in the primary live trade brief model portfolio. Added a new position on an iron condor on Apple, about a week and a half to expiration next week. Good trade, risking 5,000 to potentially make 2,000 or a little over 2,000. We're in the midst of a kind of a little bit of a lot of people call this a rip your face off rally. I don't. This is in my opinion, a relief rally. We started January off on kind of the wrong foot, and this is kind of a relief rally. There's no economic data to speak of that's powering the market higher. We got trade balance numbers. That was it. The rest of the week is going to be ginormous. We have ADP non-farm payroll tomorrow, and then obviously the Fed minutes from the December 17-18 Fed meeting, where they decided to start the taper process. So reading those minutes is going to be very interesting. Thursday, obviously, weekly unemployment claims, but Friday, the all-important non-farm payroll number. So this triple-digit rally today could be for naught if we get a swing and a miss on Friday. Remember, folks, we're in this gray area between leaving bizarro market and, quote, getting back to normal market, the new normal, where bad jobs numbers is probably going to be bad news. Unless it's completely awful. If the jobs numbers are completely awful on Friday, even then, I think we need to see 2 months in a row of just completely awful jobs numbers for the Fed to stop tapering. They have made it clear that they want to get out of this business in 2014 at the rate of about $10 billion a month. If that's the how they're going to throttle back, that should be by the summer. If they take a break or a pause, we're not going to get out of this thing by 2014. So that's my opinion. I think if we see bad jobs numbers on Friday, the market's going to sell off here, and we really are looking for a reason for this market sell-off. Record year in 2013, 30-ish% on the S&P 500. That cannot continue. I don't think it'll be continued as we enter normal market and earnings start to matter and economic data start to matter. And today's, folks say today's price action is encouraging following 3 down days, especially if you're a believer in the old saying, as January goes, so goes the year. Yeah, since World War II, 85% of the time, if the market is up in January, then it's continued over the next 11 months to gain an average of 11.5%. Very, very interesting. But since World War II, we've never had an economic tsunami hit us like we did in 2007, 2008. We've never had an unprecedented actions out of the Federal Reserve to stimulate, quote unquote, the economy. Didn't stimulate the economy, as well as I do. Enough shovel-ready jobs, right? Remember that? Hey, you got to pass this TARP, the stimulus, this Nancy Pelosi, tears in her eyes, pass this, pass that. None of it's worked, okay? So I get all these metrics, but looking in the rearview mirror with old Wall Street adages like this really is like zipping around the Daytona 500 looking in your rearview mirror. Just doesn't make any sense. Like I said, a great live trading session this morning. Put on a bear call spread on Google to Friday. What was it? What were the strikes here? 11:45, 11:50. So I sold 15 of the Jan 11:45 calls and bought 15 of the 11:50 calls as a hedge, risking $6,000 to potentially make 1,500. Not the best risk to reward, but why did I put this trade on? JP Morgan, who settled some big legal issues today. So I have a couple positions in JP Morgan that I think are going to start taking off here. But JP Morgan and Deutsche Bank upgraded GOOG. Buy. Great. This is what the stock tends to do when you see upgrades like that. Okay, it gapped up, nice little follow through here, and then right around our weekly options live trade brief, I sold this bear call spread, and you see this. It's not like JP Morgan and Deutsche Bank are going to come out and re-upgrade it today, tomorrow, or Thursday. Somebody else could come out and upgrade it, absolutely. But then once the news is already out there, you see what happens. You see this parabolic rise, and it starts to give some back. In my experience, these gap moves tend to fade a little bit. The stock tends to consolidate, and then it takes its either next leg up or down, just depending. So that's why I sold this bear call spread into this pop. It's looking pretty good so far. And our other weekly options trades are going down the fairway. We have an iron condor on the S&P 500. Risking 5 to potentially make 1,900, and we have a couple trades on Twitter. Excuse me. that are going down range as well. So good week so far in the weekly options model portfolio, and it's going to be very, very interesting to see the ADP numbers tomorrow, and then obviously the non-farm payroll on Friday. So check back throughout the week and Friday with our Friday market wrap up over at Wealth Creation Investing. Happy hunting, make sure you hedge, and I'll talk to you guys tomorrow.